guys, welcome back to my channel. In today's video I am going to be showing you guys how to read a chart. So I'm not going to make this a super long intro because I want this video to be as short as possible. But before we get started, please don't forget to like the video if you like it at the end, comment and subscribe. Most importantly, subscribe. Okay, so if you don't like this video, maybe you'll like the next video and you'll be notified when the next video comes out. But anywho, in today's video, like I said, we are gonna learn how to read these charts. Okay, so without further ado, let's get into it. Alright y'all, so let's learn how to read these charts. In order to learn how to read a chart, there are a few things that you must know first. A few things that you must know how to do first rather. So let's jump in. So first things first, price action. Price action is going to be the story that the charts tell. How do you read price action, you may ask? So first things first, it's going to be by the candlesticks that the markets print. So you can decipher the story that the market is trying to tell by how the candlesticks are printed over time. Each candlestick represents a period of time, like 1 hour, 1 day, 1 minute. It just depends on which time frame you choose to trade on, which we're going to talk about a little bit later. And then also, by observing these movements, you may be able to notice trends. If the candlesticks are printing up, that means the market is going up. If the candlesticks are printing down, that means the market is going down. If the market is printing candlesticks that are almost ranging, they're not making new swing points and they're kind of staying in the same area, that means that your market is ranging. So as you look at the price action, you will notice these areas where price tends to stop rising or stop falling, and these areas are going to be the areas that help us determine where price may reverse, which are called key levels. So next are our candlesticks. I took this picture off Google because I felt like it did a really good job at representing the most common candles that you see printed on a chart. Sorry guys, I live in the city, so I hear trucks and all the theme sirens more often than not. So sorry if you guys hear it throughout the video. So like I was saying, I chose this chart because I felt like it represented candlesticks that are printed the most often on our charts. So you can choose whatever color that you want once you start learning how to read these charts. As you'll see in the next few slides, my candlesticks are pink and purple, just that's what I wanted by choice, but universally they are green and red. Green represents your buyers, red represents your sellers. So if you see over here where my mouse is hovering, you have your green body candle, and this represents your buyers. Your red body candle on my right, red body candle is going to represent your sellers. So in order to determine if a candle is a buy candle or a sell candle, it's going to be where it opens and closes. So right here you see these shadows or wicks. This is going to represent where price pushed the highest or the lowest, and then where it finally settled at. So right here is going to be your open, this is going to be your close. Price tried to push up to this high right here, but they ended up settling right here at the top of the candle, I should say. So this sell candle right here, it opened right here, pushed up a little higher, realized that it was too high, and finally settled here. We closed out down here. Prices tried to push a little further down, but was eventually pushed back into this close of a candle right here. So like I said, this is how you recognize your bull and your bear candles. Bull again is your buy candle, representing that we're going up. Bear is your sell candle, representing that we are going down. And then right here is a few other candles that are printed on the charts. I don't necessarily use all of these patterns right here, but a few that I do use or try to point out while I'm trading are the hammers, dojis, the shooting stars, engulfing candles, tweezer bottoms, all those. But you'll learn more about those as you learn how to trade. It's just important that you really know what's a buy candle and what's a sell candle for right now, because that is going to help you determine the trend of your market. So next, your time frame. So you have a daily time frame. H stands for hour, M stands for minute. So the most commonly used ones, especially the ones that I use the most, are going to be your daily time frame, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, and your 1 minute time frame. Now you're probably asking, how do I decide which time frame I use? So it depends on what kind of trader you are going to decide to be, what type of time you can dedicate to trading. So you have your swing traders. These are going to be your traders who hold trades for, I would say, a few days to like a few weeks at a time. Your intraday traders are going to be your traders that only hold for the duration of like 1 day. So pretty much you're getting in when the markets open, you're getting out before markets close for the day. And then if you decide you want to be a scalper, you are pretty much in and out of the market pretty quickly. You are not holding trades any longer than, I would say, an hour. Most traders hold theirs, anywhere from 1 minute to, like I said, an hour. So it depends on what type of time you want to dedicate to the markets and how much screen time you also want to dedicate. So for our swing traders, you're mainly going to look at the weekly or daily time frame to determine the trend of the market. So is it going up or down? You're going to look for your key levels on the 4 hour time frame. So are you going to use support and resistance? Are you going to use supply and demand? And then your confluences for your entries and your exit points in the market, I would use the 1 hour and 30 minute time frame. And then as you can see for intraday trader, I would use the daily and the 4 hour time frame to determine my trend. 4 hour, 1 hour to determine key levels. Confluences would be my 15 minute, 5 minute. And then as a scalper, I would use the 1 hour to determine the current trend, 15 minute to determine my key levels, and then the 5 minute and 1 minute time frame to look for entries and exit points. So a trend, like I said, we are going to look for candlesticks that are being printed towards the upside, candlesticks that are printing towards the downside, and then if they are ranging in between two key levels. So in the first picture, we see an uptrending market. You don't necessarily have to look at each candlestick to determine that the market is going up. Each swing point it creates lets us know that the market is trending up. So we like to say that an uptrending market creates higher highs. So you see higher swing points right here, and then it also creates higher lows. So here's a higher low, higher low, higher low, higher low, higher low, and so forth. And then for your downtrend, we are creating lower lows. As you can see, we are creating lower highs, as you can see, and then we are creating lower lows, which indicates a downtrending market. And then for our ranging market, as you can see, price is ranging in between two key levels. So pretty much price is going to range until it decides to break out. So right here would be your resistance, and then down here would be your support. And as you can see, price is just ranging in between this area until it picks a direction that it wants to go. All right, now your key levels. So I personally use supply and demand as my key levels, as they are just a little bit easier for me to identify. I'm going to show you guys when I do a few examples how I draw my supply and demand zones. So pretty much how to identify your supply and demand zones. Supply is going to be where sellers take control, causing price to drop. As you can see, price is ranging in this area, and then right in this area right here, price just took a massive turn to the downside. And then for our demand zone, that's going to be where buyers take control, causing price to push to the upside. So right here, we kind of can't see what was going on before, but we can see that price had this massive push to the upside before it started ranging. Now for our support and resistance, we are going to identify our support and resistance as the floor and the ceiling. So think of support as the floor, pretty much where price stops falling. Usually our buyers are hanging out here. I don't know if you guys have ever heard buy low, sell high. That's kind of how traders think in terms of support and resistance. So right here, if we were entering a trade, we would very likely buy here, sell up here, but we would need other confluences to confirm our entries and exits. Resistance, like I said, think of it as the ceiling for price. It's where price stops rising and where sellers are usually hanging out, getting ready to sell if they see that the market is not pushing up any further. Like I said, in order to learn how to read these charts, you need to know how to read price action. So your price action is going to consist of your candlesticks, trends, and key levels. Those are the 3 most important things that you need in order to understand what is even going on in the markets. Then you start worrying about your time frames. So for example, what time frames you want to use to trade on once you have an understanding of what's going on even in one chart. So say for instance, you want to start learning how to look at so say for instance, you want to start learning how to read charts right now, and you don't know what time frame to start with. I would recommend starting on the daily time frame. That's going to be the cleanest price action that you will see compared to the lower time frames, and I think it'll give you a good basis of understanding trends, key levels, and candlesticks. All right, so let's go and do a few examples. So like I said, we are gonna just go to the daily time frame because it's going to provide us with the cleanest price action. All right, so you're ready to learn how to read the charts, right? Right. So you're gonna go to TradingView.com. I'm gonna leave a link below that'll take you directly there. It's free to sign up. You don't have to purchase the paid versions just yet until you start learning exactly what's going on. So just worry about the free version right now and start learning how to read these charts, okay? So first and foremost, we are going to go to our daily time frame. Like I said, I have a few others bookmarked up here, but just for the purpose of this video, we are going to use the daily time frame. Okay, so let's look at this general area right here, and let's start off with trends. As we can see right here, the market is downtrending. We are creating these lower highs, lower lows. Let me make it a little darker so you guys can see. Yeah. So yeah, as you can see, the market at this time was downtrending, giving us lower lows and lower highs. So next, as you can see, the market is starting to correct into an uptrending market. Very short-term uptrend, but it is important for you to see when the market is starting to change direction. So I would say in this general area right here, the market started to range before it decided to give us somewhat of a push. So it ranged in between this area for a while before it decided to give us this break to the upside. So right here is our uptrend. Short-term uptrend before we came back down into this area and then headed back up. So as you can see right here, this is probably a better example of an uptrend. higher lows, higher highs. You guys get the point before it starts consolidating or ranging again. All right, let's mark up some support and resistance areas. Let's go back a little further. So I would say right here is a pretty good resistance area. So price failed to break above for a while. So if you scroll back to the left, you see price stayed below that area, so that 98.423 area for quite some time until it broke out. So we had a few fake outs right here, immediately came back below it, had another fake out with a deeper pullback, and then finally broke. So it turned into support for maybe a few months, and then after that it immediately went back down. So that lets me know that this is a highly respected resistance area. Buyers tried to push price above for a while and it worked, like I said, for a few months, but it immediately came back down, which lets me know that is a key level. Price stayed below this level for years. It didn't reach back up until 2022. So let's see. Yeah, I mean, even in 2019, price was below this key level. And then finally, in 2022, price has stayed above. So I would say this is a pretty good resistance area. It has not touched since 2022 for me to say that it's truly a reliable support area. So let's find an area of support. I would say this is a pretty good area of support right here. Price is tapped into the 100.987 area quite a few times, had a false breakout and still has stayed above it. Came back down again in December of 2023, immediately bounced back up. Tried it again in September, immediately bounced back up. So I would like to say this is a pretty strong area of support. So pretty much identifying support and resistance, you're just gonna see what happens in the past and which key areas gave us our really big like swing points, like our really big swing lows, swing highs that help us represent the key levels in the areas that they respect the most. Support and resistance is also going to show us where we should be buying and selling as long as we are trading in the direction of the market. Alright, let's mark up some supply and demand zones. I like to think of supply and demand zones as where the big money makers are. So these are going to be our banks and financial institutions that essentially are going to move the markets. So this area that I just marked up right here is a demand zone because it gave us this push to the upside when it was downtrending. So how I draw my demand zones, I use the previous candle that started the move to the upside, right? As you can see, the market gave us this push to the upside and then gave us a supply zone where it immediately dumped back to the downside. So how I identify my supply zones, I take the previous candle that started this move to the downside, right? So I take the top of the candle and the base of the candle, and sometimes I include the wicks. It just depends on how the candlestick forms, and then I wait for a break and a retest for me to determine if I want to enter or not into the market. Like I said, supply and demand is going to let me know where my banks and my financial institutions are, because usually they are followed by really large moves, as you can see. So like this uptrend right here lasted from December to February. This downtrend right here lasted from February until March. So it's easier to see the direction of the market with supply and demand, in my opinion. But everyone has like their own strategies. All strategies work. You just have to find your edge in the market. So I think I skipped candlesticks. I did skip candlesticks. So I am going to actually leave a link to my Amazon store in the description below, called the Candlestick Bible. I think it's literally the best book ever that teaches you how to read candlesticks and what they mean when they are printed in the market. So whether they are printed in an uptrend, or if they're printed in a downtrend, if they're printed in a ranging trend. That book breaks it down so well, probably better than I would be able to break it down. So like I said, I'm gonna leave a link in the description below so you guys can check out that book. So I hope this video made sense to you guys. I feel like I was just, I don't know, babbling and just, no, I feel like I was just yapping. Let's say that. I feel like I was just yapping, and it was making sense to me, and it makes sense to me because I've been doing this for almost 4 years now. So I need you guys to tell me if it makes sense or not, so I can break it down further. I am all for constructive criticism. If this video didn't make sense at all, drop a comment and be like, girl, this video did not make no sense, okay? Do it over. I will be receptive to it. I'm gonna leave a link in the description below to my Amazon storefront, and it's going to have the Candlestick Bible link to it. If you are really serious about getting into these charts, I would say go and purchase that book. It's a really easy read. I read it in like, I don't know, 2 or 3 days, and I've read it like 5 times now, and each and every time I learn something new. It's just a really valuable book that you should have while you're on your trading journey. I'm also gonna leave a link to TradingView.com so you can sign up for the free subscription, so you can start reading these charts. You can read stocks, you can read in the foreign exchange market, crypto, options, like whatever it is that you are interested in trading. This is like not like the Candlestick Bible is not tied down just to Forex. Like it's tied down to reading charts as a whole. I think this is so important to learn before you even learn the strategy, before you even learn how to demo trade, before you learn how to live trade. Like before you get into the markets period, you need to know what's going on, and you need to spend chart time. The only way you're gonna learn how to read the charts is if you put in that time and figure out what's going on. So like I said, guys, I hope this video made sense. If it didn't, let me know in the comments below, and drop a comment if you made it to the end. Let me know that you made it to the end of this video. I hope, and let me know if you learned something. Like, I love talking to you guys, and I really want to know if you learned something, if you didn't learn anything, or what I could do better as I am working on growing this channel. But let me stop yapping because I know y'all got stuff to do. I will see you guys in the next video. Do not forget to subscribe, like the video if you like it, and comment, and I'll see you guys in the next video. Bye, guys.
You need a friend to come hold you down, be that one to share.